The screen is visible?
Yes, sir.
Okay. So we have seen revenue center, cost center, profit center, and investment center with proper explanation. Its summary is given in one chart, and how simple it is to remember with this chart, you will come to know. Revenue center. What is meant by revenue center? Output measured in monetary terms. Now, there could be one simple question asked by anyone, even it's a common man can ask, what is the difference between revenue and profit? How many of you have become or completed become or having commerce background or having financial work experience? Anyone can explain or differentiate revenue and profit? If you can't, I will, because we do have very limited time. Okay, so revenue, what it comes is the overall act performed by all departments as a team, wherein not just money is earned, but money is saved. Revenue generation is relevant with not just selling something and gaining more money than what was invested. Revenue as part is relevant with account, finance, then manufacturing, distributors, all the stakeholders coming together and giving benefit, being team member to the company, to the organization. Now profit is what? You are adding profit margin to the manufacturing cost, and selling price is decided. Then that profit margin added is a profit for that particular seller. That may be organization, that may be retailer, that may be distributor, that may be wholesaler. Anybody who's adding profit margin and selling a particular product or service is earning profit. Revenue as such is earned by entire organization. Earning revenue is not one individual's, what I mean to say, not the work of one individual, but it is done by entire organization. Now expense or cost center. Expense center where money is spent on different types of processes, like conversion of raw material into finished goods, storage of raw material, buying of raw material, storage of finished goods, selling it to distributor, wholesaler, agent. Then all these things are expense or cost center. Input measured in monetary terms. Profit center, where we are having profit center when the finished goods are sold to carrying and forwarding agent, super stockist, or main wholesaler. Outputs and inputs measured in monetary terms. Investment centers. Now investment is done by purchase of raw material, by processing those raw materials into finished goods, by having in storage finished goods, by asking wholesalers to invest for buying those finished goods. These all outputs and inputs and assets measured in monetary terms. A company is about to start their second manufacturing unit elsewhere in the country. For that purpose, they are buying capital items like land, machinery, and other terms. So that one is investment. That investment in assets measured in monetary terms. Now, how the manager's performance is measured when it comes to these different types of centers like cost center, profit center, and investment center. When it comes to cost center, evaluation of manager's performance is done by cost control. Yes, that's very important. Quantity and quality of service. Cost control, how this can be achieved or attained? When manager working in cost control department or in a financial department wherein he is dealing with raw material suppliers. Now, when he is buying raw material frequently from 2 to 3 parties, he has to ask from them quotation, how much per kg, per unit, per 10 kg, per quintal they will be charging cost for raw material, and he has to make it clear them that out of 3, that party will win the contract or will get the tender who's quoting the lowest rate. This is what cost control measures are. Now, when they are purchasing raw material at the lowest cost, definitely that benefit will pass on in processing that raw material, and in huge quantity, in bulk quantity, when this raw material is converted into finished goods, that finished goods cost also by default is at low side. So when and wherever and whenever required, manager has to take under control the cost what he is buying, whatever it may be he is buying. It's not that every other organization do possess or do have their manufacturing unit. Majority of marketing companies like Hindustan Unilever Limited, Procter and Gamble, Wipro, and there are many more who are marketing their brands, but it's not necessary that they do have their own manufacturing firm. Bulk manufacturers are different than marketers. They are two separate entities. Only thing is, when a manufacturer is manufacturing particular product according to marketing company's requirement, they should have fine-tuned communication with each other. What marketing company expects and what manufacturer gives should have proper expectations and performance. Performance should meet with expectations of marketing company. So that way, quantity and quality of services, quantity and quality of products, not just services, are also measured. Now, profit center has to give profitability. Now, that profitability is generated from selling goods and services. That way, manager's performance is evaluated. Investment center, return on investment and residual income. In your syllabus, when you will go through one-page syllabus copy, in investment center, only return on investment is included, not residual income. So when it comes to investment center, evaluation for manager's performance is done on return on investment. What all are the investment we are doing from start to end, from what we say, seller's seller up to buyer's buyer. If there are certain companies who are purchasing, who are selling raw material, it's not that they are taking out from natural resources. When raw material is purchased for a particular firm, that raw material buyers also buy from someone. Now, in building construction, builders and promoters are buying bricks from brick manufacturers. Now, these bricks are manufactured at those brick manufacturers' point of manufacturing, but they also required to buy soil, water, electric current, and they are also required to pay labor charges on daily basis when they are manufacturing brick. So these manufacturer of bricks also, although they are supplying raw material, for conversion of raw material into another form, they have to buy raw material from someone else. So this is what we are talking, from supplier to buyer's buyer. So this is on return on investment. Now this particular example, I hope, will clear your doubt. One example relevant with the theoretical concept we are talking about is enough for you to clear your doubts. Okay, students, you all are listening here? Are you all with me? You can hear?
Yes, sir.
Okay, so be alert, and whenever I am asking any questions, please be prompt to reply me. From making mute to unmute, it's a matter of fraction of second. No, it shouldn't be 1 minute and 2 minutes. Now here I am giving you an example. Superior Foods Corporation provides an example of the various kinds of responsibility centers, profit center, cost center, investment center that exist in an organization. Now here with dotted lines, what is shown is cost center. Cost center includes finance, legal and personal, where we have to invest cost. An investment center is also given. Superior Foods Corporate headquartered, president and CEO, operations vice president. They are investment. When it comes to operations of a particular organization, operations include manufacturing, storage and transportation of raw material, from raw material to finished goods. These all are investments. And when it comes to cost center, finance, personal, they all are cost centers. Okay. The next point here is profit center. From where we can source profit. If a food corporation is an example for responsibility centers, profit center is their products which are sold in the market. Which all are the products they do have? Salty snacks, beverages and confections. Confections means bread, butter and all those things. Bakers and confectioners. If you have seen title of any bakery, that is confections. Confections is a product category within bakery. Do not have any confusion. Beverages, salty snacks and confections are the profit centers. How come they are profit center? Because these are the products which will sell at loose quantity, at wholesale quantity, and it will generate profit. These all products have to generate profit when they are getting sold in the market. This is why profit center is called as salty snacks, beverages and confections. Now cost centers, bottling plant, warehouse and distribution. These all are the processes. Now salty snacks or beverages, they are packed in a bottle, and to have those bottles of own company. Now when bottles of the required size are bought from a manufacturer who's having bottling plant, it may cost at higher. But what happens, whether bottling plant is owned by Superior Food Corporation or they are buying bottles in bulk quantity from a manufacturer of bottles, it is costing them, isn't it? Now warehouse where these all particular products require certain temperature, require certain humidity, and that's why warehouse with proper atmospheric condition is also required. So that one is a cost center. And distribution manager, all these products throughout country, if it is example from India, Superior Foods Corporation, distribution is a big challenge. It's not just a work, but distribution is required to be kept in a proper manner. West zone, south zone, north zone, east zone, whichever and wherever required, distribution manager has to be on his toes, and he's required to have past experience, which particular month of the year or quarter of the year is having very high demand for particular product. Out of these three, which is selling more in which month? Beverages, if they are non-alcoholic beverages in cool condition, certainly their high demand will be in month of Feb, March, April and May, because this is the summer season in India. Salty snacks, these particular products will have throughout year consistent demand. Confections for family usage or individual consumption, that also will have throughout year demand. So these all are cost centers. Now, very important concept, that is return on investment. If you have studied commerce for your graduation, you must be knowing this particular term. As any numerical is not expected, I will go through only theoretical concept. How return on investment is calculated? ROI is equal to income divided by invested capital. Now, again, it is bifurcated into second step, that income divided by sales revenue into sales revenue divided by invested capital. Now, sales revenue in both the equations will be minus, and final calculation will be ROI is equal to income divided by invested capital. Now, if income is 100 and invested capital is 20, ROI is equal to 20. 100 divided by 20 comes to 5. ROI will be 5. Now, how to improve return on investment, ROI? Very simple 3-step procedure or 3 ways are given here. Increase sales prices. Increase sales prices. Decrease expenses and lower invested capital. Lower invested capital. Now, fixed assets like land, building, furniture, they all are capital items. If fixed assets are increasing and sales is decreasing, in that condition, return on investment will be low. If expenses are more, investment in capital expenditures is higher and sale is less, company definitely will go in loss. So what to improve ROI? Increase sales price, decrease expenses and lower invested capital. Invested capital, you all hope that knows this capital things, that is land, furniture, building and other items which are fixed, which are not movable, machinery also. So these all are capital items. So we have to lower them. Return on investment, again have one more equation, that is operating profit divided by division investment. If operating profit is more and division investment is less, then return on investment will be more. That means company is in profit. Now, ROI is a measure of profitability that is independent of the size of the division, and its disadvantage is it can encourage divisional managers to reject good investment. Now, division investment may include different sizes of packaging, different sizes of containers, or within a product have product line or product depth. So these all within production department or marketing department may have divisions. Now these all divisional managers may reject investment. This is the disadvantage of ROI. Now the next concept is return on assets, ROA. Listen carefully. What is meant by ROA? General assessment of profitability, wherein all capital providers' point of view. Capital providers are included in return on assets. How come our assets can give us return? That is what explained here. An indicator of how profitable a company is relative to its total assets. Okay, let's not be it a monotonous dialogue from my side only. What all are the assets a company do have? Please answer me. This is very simple question I am asking you.
Machinery.
Huh?
Machinery.
Machinery which is used in manufacturing process. Okay, that is definitely an asset. Apart from machinery,
Capital. Capital.
my dear, that capital itself includes machinery. Apart from machinery, what all are the assets which could be quoted as example? That is land,
Building.
building,
Labor.
labors or furniture which is there in the office. These all are assets for company, and these all assets also take part in making company profitable, have some role in making company profitable. Whichever corporate world companies you see, when you go into them, you will find all the furniture is imported. Their walls, their floor, their ceiling, everything you will find is very impressive. You are feeling that you are visiting a modern, up-to-date and technically advanced company, even if it is not an IT firm. Now, when it comes to IT firms, whether they are in Hinjewadi or at Viman Nagar, if you will have one round of that entire area, you feel if you are in India or some big city from America or England. Don't you feel that? Isn't it? When we go through IT campuses like Atos Intel or some other companies, we feel like we are visiting any foreign country, not India. So they all are assets and they impress the customer. This particular asset concept or other assets than actual selling goods or selling services, it has a one big talk we can arrange for. Now, when it comes to service centers, reception counter, actual rooms, deluxe room, AC room, non-AC room, these are the service centers where customer is getting services. But the moment customer arrives in any hotel, any lodge, he is required to and requested to sit at reception counter, where he is required to book his name, ask for room, collect keys, and during that encounter with company representative, receptionist, he is getting impressed or he is not getting impressed. Both the chances are there. So these all assets like what we say, reception counter or welcome room or something that is required to have formal introduction with customer, the point where customer and representative from organization are having formal introduction, that is also an important asset for company. So return on assets gives an idea how efficient management is at using its assets to generate earnings. The receptionist sitting at the front of any organization is an important asset because the way she or he communicates with their clients, customers, is the very first impression that customer do have in his mind. So how efficient management is using its assets is important. Sometimes this is referred as return on investment also. ROI is calculated by dividing company's annual earning by its total assets. Return on assets is calculated by dividing company's annual earning by its total assets. Here formula is given. ROA is equal to net income plus interest expense net of income taxes divided by average total assets. Hmm? Now ROA is further explained here. ROA tells you what earnings were generated from invested capital. ROA for companies can vary substantially and will be highly dependent on the industry, which industry we are working, whether it is tourism and travels, hotel, or any particular food company, any other transportation or civil aviation company. This is why when using ROA as a comparative measure, it is best to compare it against company's previous ROA or the ROA of a similar company. What was previous return on asset? Previous in the sense last 3 financial years, last 3 calendar years, last 5 financial years. That way it is calculated. ROA figure gives investors an idea of how effectively the company is converting the money it has to invest into net income. Now, ROA, the better, the higher the ROA, the better. Return on assets, if the higher, better, because company is earning more money on less investment. Now, the next concept is economic value added, EVA. In corporate finance, economic value added or EVA is an estimate of firm's profit, being the value created in excess of the required return of company's investors. If you cannot understand the first point here mentioned about EVA, in simple language it is stated here, EVA is the profit. EVA is again profit earned by firm less the cost of financing the firm's capital, less the cost of financing the firm's capital. Now, idea is that value is created when return on the firm's economic capital employed, return on the firm's economic capital employed is greater than the cost of the capital. EVA tells how much shareholder wealth is being created. Economic value added, more the economic value, more the share prices. Please remember, we buy companies shares very quickly when their title is Bajaj Finance, Bajaj, Reliance, Tata, Telco, and likewise Mahindra, Wipro. They do hold very high value when it comes to economic value added because of their image, because of their total marketing turnover, presence in the market, and profit what they are earning. So EVA is calculated by taking a company's net operating profit after tax, no PAT, net operating profit after tax. As it is all these terms, every slide you will be knowing that all these terms are relevant to finance. So I have to go through the way they are. There's no explanation or imagination I can add. That's why we are going like this and subtracting from it the product of the company's invested capital multiplied by its percentage cost of capital. EVA is equal to no PAT, net operating profit after tax, minus company's invested capital, or EVA is equal to R minus C into K. This is the formula EVA calculated. Numerical is not expected. I am once again telling you. Now MVA, market value added, economic value added, and then market value added is simply the difference between current total market value of a company, and the capital contributed by the investors. What investors contribute as a capital? What investors contribute? The money invested in buying the shares is contributed by the investors. Now MVA is equal to V minus K. MVA is equal to market value added. V is the market value of the firm, value means V, market value of the firms, including firms equity and debt, and K is the capital invested in the firm. So MVA is economically equivalent to the traditional NPV, net present value, and MVA is not a performance metric like EVA, but it is wealth metric measuring the level of value a company has accumulated over time. The total value of a company in monetary terms, how much it is in entire operations, entire from the establishment till date, that is calculated as market value added. Now, how MVA works out? MVA is the difference between company's market and book value of shares. According to Stern-Stewart, if the total market value of a company is more than the amount of capital invested in it, the company has managed to create shareholder value. And if the market value is less than the capital invested, the company has destroyed shareholder value. This is what relevant to market value added is equal to company's total market value minus capital invested. Now, here I will explain you with one example. Being student or being employee of any firm, after attaining age 18 plus or 21, you can buy shares of Reliance or for that matter any company. Students, you can buy shares. In simple language I am asking you.
Yes, sir.
I can buy shares. Anybody can buy shares of Indian citizen?
Yes, sir.
Now, if I can buy shares of Reliance, how come? And like me, there are thousands and lakhs of people who are having shares of Reliance company. That may be Reliance India Limited, Reliance Infocom, or any other entity of Reliance. If we thousands and lakhs of people do have shares of Reliance, why the owner of Reliance is called as Mukesh Ambani? It should be owned by we all people who are holding shares. Is there any reason? What may be the reason? I can have 10,000 rupees shares of Reliance, 1 lakh rupees shares of Reliance, even 1 crore rupees of shares for Reliance. Isn't it? If this much investment like me is made by hundreds and thousands of people, why Mukesh Ambani is owner of Reliance?
He has found, he is the founder of that company and also owner. So he is running the company, and we as the customers are holding the shares. That means only the proportionate values or profit.
You are up to the answer, but okay, I appreciate your response. Now, exactly, I would like to tell you, any entity of Reliance owned by Mr. Mukesh Ambani, what happens? 51% of shares are in possession of Mr. Mukesh Ambani, and remaining 49% are distributed among investors. You are getting it? What happens when Mukesh Ambani is holding total market value? It is 51%, and capital invested is 49%. It is making this plus this, not minus. Market value added. What happens when shares prices goes up? When shares prices goes up, its market value is added. Here, what is happening? if the market value is less than capital invested, the company has destroyed shareholder value. What is owned by Mukesh Ambani is more, and what is invested by capital invested by shareholders is less, then it is destroying the shareholder value. Remaining 49% is shareholders value. That's why, being 51% shares owner owned by Mukesh Ambani, he is called as the owner. Getting this point? Share trading is done this way. It's not just with Mukesh Ambani. There are several companies, public limited, where you will find, although they are public limited, one person is chairman, managing director, or having the figure of ownership, having the figure of owner. So let more elaborately, it is said with MBA that simplifying assumption that market and book value of the debt are equal. This is same as market value added is equal to market value of equity minus book value of equity. Now, book value of equity refers to all equity equivalent items like reserve, retained earnings, and provisions. In other words, in this context, all the items that are not debt are classified as equity. Market value added, MVA is identical in meaning with the market to book ratio. MVA is an absolute measure and market to book ratio is a relative measure. Now, if MVA is positive, that means the market to book ratio is less than 1. These all are MVA characteristics. Again, it is explained. MVA as a subtopic is important for you all for theoretical explanation. According to Stewart, MVA tells us how much value the company has added to or subtracted from its shareholders' investment. When shareholders do have higher value and company's total market value is less, what happens? Company's total market value minus capital invested, market value added comes as negative figure. Okay, now unsuccessful companies decrease the value of capital originally invested in the companies so that shareholders can buy it with the lower price. Whether a company succeeded in creating MVA or not depends on its rate of return. If a company's RO exceeds its capital, the company will sell on the stock market with premium compared to the original capital. These all are the characteristics of MVA. Now, in MVA, whether a company has positive or negative MVA depends on the rate of return compared to the cost of capital. Now, MVA can also be defined in relation to economic value added. And economic value added measures whether the operating profit is enough compared to the total cost of capital employed. Here, Stewart has defined EVA as the surplus of net operating profit, where NOPAT is profit after depreciation and taxes, but before interest cost, and capital cost, weighted average cost into capital employed. So EVA is ROA minus WACC into capital employed. This is the characteristics of market value added. The last point is DuPont analysis. DuPont analysis is subtopic. These all are characteristics of MVA. The last one. Please go through them. And DuPont analysis, I have to finish as last subtopic. It's with US company pioneered a system of financial analysis. What we are doing here, performance measurement in financial way, and DuPont analysis is one point or in system which is pioneered by one American company, which has received widespread recognition and acceptance. Now, the DuPont analysis is a system which considers important interrelationships based on information found in financial statements. What all are the financial statements a company do have? Before going ahead with DuPont analysis, what is stated here? Financial statements. Which financial statements company do possess or have to create? You got my question? You are hearing? Yes, students? Yes, students, what is meant by financial statement? Which all are the financial statements company do have?
Profit and loss account, balance sheet,
Balance sheet. Balance sheet of what?
of 1 year.
Now, what happens when it comes to balance sheet? Profit and loss account. That is balance sheet of profit and loss. Other than that,
Ledgers,
ledger. Okay.
Cash flow statements.
Yes, expense statement. Again, apart from expense statement, balance sheet. Very easy to answer. Salary statements, monthly salary statements, expenses, and profit and loss account, balance sheet, quarterly, half yearly, annually. They are updating it even on monthly basis also. So what happens? Information found in financial statement is used in DuPont analysis for financial performance. This is what DuPont analysis is doing. What it is, DuPont system, what it is? The system identifies profitability as being impacted by three different levels. Three levers, not levers. Earnings and efficiency in earnings, which is titled as earnings. Ability of your assets to be turned into profits, earnings, turnings, and financial leverage. These are three levers they are using in DuPont analysis. DuPont financial analysis model is a rather straightforward method for assessing the factors that influence a firm's financial performance. Now, equation of DuPont analysis is analysis of return on stockholders' equity. Return on equity is equal to NI divided by equity. This is the equation of DuPont analysis. Now, DuPont equation of ROI is NI divided by equity, net income divided by sales into sales divided by asset into assets divided by equity. So sales is getting minus, assets also getting minus, return on investment is equal to profitability into efficiency into leverage. Now the last slide of this topic, subtopic, DuPont system, which is having income stream, wherein earnings, turnings, and leverage, as stated in previous slide. Earning is operating profit margin. Asset turnover is turning. This gives return on assets. Investment stream is financial structure and it equals to return on equity. This particular point is explained by chart. Income stream and investment stream, where income comes from profit margin and asset turnover, and which equals to return on asset less interest adjectives. Now investment is what? Financial structure. Whatever money is invested in manufacturing, then paying salary, then buying assets, then what we say, storage of goods, transportation, octroi, taxes, all these things are included in investment stream. Now both, when it comes to, is equal to return on equity. This is what relevant to DuPont system. Okay, these all factors you can have revision and will come to know, which is easy to understand also. I am going to forward them to your respective mail addresses. Now I am told by Ajotikar madam that I have to give you assignment. Classroom assignment is not a possible thing for these days situation. Open book test I will be giving you tomorrow or day after tomorrow. Your first topic only will be included in your open book test, and you have to answer it in writing a answer sheet on assignment paper or full-scape paper. You have to write it. That question will be for 20 marks or will be converted into 50 marks. I will have communication with Ajotikar madam and will let you know. Apart from this, it is expected that your exam, online exam, will have start in 2nd or 3rd week of June. Yesterday morning at 11 o'clock, we had meeting of faculty along with Shilpa madam, Shilpa Kulkarni madam, and it was expected that your exams will be starting by the end of 20th or 21st June. That means 2nd, 3rd week of June, and your exam is completely based on multiple choice questions. Although it is for short duration, only for 50 marks, writing descriptive exam is always easier than appearing for objective type of exam, because there are only two chances when you are appearing. Either your answer is wrong or correct. So that way you have to prepare properly, and minimum 250 multiple choice questions should be studied based on these 5 topics of enterprise performance management. And apart from 250, more than 250, even if you are having 500 and 500 plus, it's well and good. Again, the same thing is applicable with retailing analytics, and that particular subject will also have multiple choice question exam. All of you have to study well, because your answer has only 2 chances, wrong or right. And if you are doing preparation based on your particular topic with chances of getting correct answer, word to word, sentence to sentence, when it comes to formula, its final answer, or the particular definition of a topic or subtopic, you understand well and then go ahead. Remember how to study. I am giving you this hint. Although you are in 4th semester, there are 5 topics, okay, in enterprise performance analysis. You as a student right now attending class are in quantity 20. Even if you make Mutha, this is not just internal. Yeah, what assignment I am giving is for internal. That's correct. What I am talking is of university exam, online university exam. Let me finish first. I will answer your question also. Yes, this is for internal assignment. What assignment I am giving? Concurrent evaluation, comprehensive concurrent evaluation, that is for internal exam. Open book test I will prefer to go with for enterprise performance management. Now here participants are 20. Okay, now total topics of EPM are 5. Listen carefully. I am giving you very important hint, and this worked out very successfully, as I am having in teaching experience of last 9+ years. I have this hint given to all my batches students for preparation of exam. Now with 20 participants, if we divide 5 topics, how much topic per 4 student comes? One topic for 4 students. Now group of 4 students will prepare only one topic. 1, 2, 3, 4 first topic, 5, 6, 7, 8 second topic, up to 25 topics. Okay, now preparation will be done with reference book, with lectures attended, and with multiple choice questions sourced from question bank in college and question bank from Google search engine. All these things you should have in writing or in soft format. Those 4 students for one topic. Now what you have to do? You are not supposed to prepare as an individual student only one topic. You will fail definitely. You have to share others' topic with you and your topic with others. You will get study material. All of you will get study material for 5 topics. And remember always, with discussion among you friends, you can study fast. If you are sitting alone and having your best try to understand one concept and to do study, one thing, your study goes slow. You don't have that much time now. And another thing, there are many concepts what your friends understand, you don't. It's quite possible that certain concepts you understand and your friends don't. So sit together, prepare one topic, make 4 students group or 5 students group, up to whatever your strength is, and share the notes, PDF, MCQ with your friends and let them share theirs with you. That way you can prepare well in very short duration and you will have very good study material. But preparation of each individual topic among 4 students or 5 student group is your responsibility. That you have to do honestly. You are getting my point? Students, you are getting my point?
Yes, sir.
What method I am suggesting you is worth to implement, or you want some suggestions to make? Just unmute and answer.
No, sir, we can work like.
Have you ever studied in this pattern? Anybody shared such type of idea? It's not my greatness. It's quite possible that earlier also it was told to you. But you have to implement it, which will save your time and which will save your effort. Please remember 2 things. Prepare one topic among 4 students by sitting together. And whenever you are doing study, sit in a group. Instead of talking, chatting, and having other worldly subjects, just discuss about your topic of subject, your preparation of study, so that you can go faster. When you are sitting alone and doing study by referring books, by referring notes, by using laptop, Google search engine, MCQ and all those things, you are going slower. Remember always. But with this method, you can go faster and you will have all study material. You will share yours with other and others will share their with you. It's like cooperating each other and getting benefited. So that way you can prepare your topics and you will be getting more marks. Isn't it? Work to implement.
Yes, sir.
Okay. So I will stop here and open book test. Let's see what at least definitely it will be one topic number 1 only, introduction to performance management. And apart from this open book test, another 4 topics are yet to complete. Now from second topic till 5th topic, I will go with the main concept, gist of the topic, not instead of going into details of every topic. There are parameters, financial parameters or performance measurement parameters for bank and e-commerce company in 4th and 5th topic. So that also we can go little bit faster, because whatever time is left with us, within that scheduled time frame, we have to come to the end of total syllabus. And anyway, your MCQ preparation, what you do, that will decide your marks. Your internal marks definitely will be at higher end and external marks, but scale down system, you know about scale down system? So far you completed your 3 semesters. What is scale down system in marks?
Internal marks will be brought to the proportion as per the external marks which we receive.
And this is applicable to MCQ type exams also?
That I don't know, sir.
That you should know. But
Please
no,
tell us, sir.
no, this will be your 4th semester exam, isn't it? Online.
Yes, sir. Yes, sir.
And what about the 3rd semester? That also you appeared online.
Yes, sir.
Then your online exam for 3rd semester was having internal marks as well as external.
Yes, sir.
And that were not scaled down.
We actually did not receive our final mark sheet, so we don't know.
Yet to receive 3rd semester result.
Yes, sir.
Okay. So let's see. I will inquire with my seniors, Ubade sir and Anand Padre sir, if scale down is applicable to this online exam also, and I will let you know also. Tomorrow I will let you know. Okay. Now I am
Yes.
leaving the class.
Thank you, sir.
Okay. Thank you. Bye.
Thank you, sir.